Let's now invite Mr. Tulsian and Mayuresh Joshi. Good afternoon, gentlemen. Mr. Tulsian, first a word on Welspun India, if you have tracked this story. And do you see maybe one more down circuit or more downtick for the stock from here?
See, Anuj, if you take a call on the company's position, they have all been thriving on the US market. And if you see, they are the largest manufacturer of the home furnishing and bed sheets and towels and all that, largest in Asia, and have significant US market. And if you see, they have tie-up with JCPenney, Target, Walmart and all sort of things, having a very good presence in US. But suppose if you just go by the news flow, I'm not saying that whether the wrong has been done by the company or it could be just a gimmick by the Target also, not to go ahead with because of the low, or maybe because of the low offtake seen in US. So maybe that Egyptian cotton has not been used. Suppose if I just first, accept that the company has done something wrong, then that is seen very bad for the company. Because if you take a call, the company gave a target of 2 billion top line by 2020. Right now they have sub 1 billion, or in fact I would say that they have a top line of close to 6,000 crore, and they are looking for a top line of closer to about 14,000 crore in next 4 years, and that looks really unachievable if this kind of things go on further. Tomorrow you do not know, maybe JCPenney, maybe Walmart, they also may come out with a similar kind of inspection and all sort of things, though the company management has said that they have appointed an independent auditor to verify the facts and all that. But yes, in the near term things will really be seen quite negative, and I won't be surprised to see maybe couple of at least lower circuits. Maybe tomorrow it will hit 20%. Then because these type of things have been happening. We have seen that thing happening in case of Mandana Industries. We do not know what was the real reason for that. But yes, apart from, because whatever damage has happened to the company, but we need a caution in case of other stocks also, like Indocount, which is again has been, in fact, Indocount and Welspun, if you see, both have been going neck to neck in terms of the margins and all that, and both have been thriving on the overseas orders. So maybe at least I will warn the other shareholders, invested in the other companies, at least to be cautious. But yes, as far as Welspun is concerned, I won't be surprised to see at least couple of lower circuits seen happening, maybe 20% tomorrow, and then we will see the lower circuit getting revised to 10%, then maybe thereafter one more circuit. At least 2 circuits seem certain on the stock, looking to the current situation which we have gathered.
Okay, so 2 more down circuits on Welspun India. Lots of concerns about other bigger players like JCPenney's, etc., that perhaps could pull the plug given that Target has. But let's discuss some more stocks now. Mayuresh Joshi is also with us. Mayuresh, the stock of the day from the frontliners is Infosys. New 52-week low over there. For a long-term investor, is this perhaps a mouth-watering opportunity to get into the stock?
So afternoon, Sonia. If you look at how the revenues have panned out for the quarter gone by, they're clearly disappointed in terms of top line growth, with dollar revenue growth of just 2.2%. Having said that, probably I think if they are expected to meet the target, the revised target in constant currency of 10.5 to 12%, I think they'll have to clock in an asking rate of 3.3 for the remainder of the 3 quarters. And we all know Q3, Q4 are traditionally weak quarters for IT companies as a whole. So I think Q2 is going to be one big outperformance that is expected to come through from Infosys. On the other hand, probably I think if you're looking at the kind of vision that Mr. Sikka still has laid out, $20 billion in terms of sales, he still has to do that at a compounded pace of 12.5% over the next few years. Utilization levels have been quite reasonable. So again, I think there is some amount of tailwind that can probably come through, and the kind of tailwinds that one really expects from currency as well, if it's expected to stay in the same range, can have a multitude effect. Secondly, I think the order wins have been reasonably better for Infosys in the quarter gone by. It is the execution thereof, because the commencement of ramp up of large deals did not happen in the quarter gone by. There were some issues in terms of headwinds for the consulting business as a whole. But $757 million is a big win in terms of orders that has come through. Now, what happens with Brexit is a big unknown for the management and generally for the analysts as a whole, and one is not really certain on how this will play out. However, as you rightly said, I think valuations are looking extremely attractive at this point of time. Even if you take an EPS of around 72 odd rupees on an FY18 perspective, the stock trades around 14.1 times, which is very attractive. But again, I think from an investment perspective, my own sense is that lower levels in a staggered way over the next few months, because underperformance of IT stocks, including Infosys, might continue, though from a long-term perspective, they remain extremely attractive.
Okay, I think we are expecting NTPC's numbers anytime soon. Let's pull out that stock as well and see that intraday, because That's among the last of the large cap names. Okay, NTPC Q1 net profit of 2,369 crores. I think there would be some adjustment because of the accounting, and that's why we might not be flashing the versus numbers, Sonia.
Yes, the poll has about 2,346 crores. So it's largely in line with what the analysts were estimating, accounting standards or not. But that would be a growth. Let's wait by for what the versus figures are. If we go by what it was earlier, then it would be a growth of around 10% or so on the bottom line. But this time, because of the change in the Ind AS standards, we won't keep that figure. Okay, let me just tell you what the number is. 2,369 crores compares to 2,276 crores. So that's about 6-7% growth that we're seeing on the bottom line. And on the top line, let me give you the number. Income from operations has come at 19,062 crores versus 17,085 crores. So that's a good growth, actually, double-digit growth seen in the top line, and bottom line growth of around 7-8%.
Oh yes, poll of top line was 18,487 crore. Mr. Hussain, you track NTPC. Is this a stock that you would want to buy at 164?
Anuj, I won't be buying it, because if you really see the kind of growth which we have been seeing from the company in spite of the good capacity additions which we have been seeing happening, I am not too convinced, because actually those things are not reflected into the profitability of the company. In spite of having the generation capacity of closer to about 45,000 megawatt, I don't think that you need the trickling kind of increase in the profitability. So I won't be taking an investment call as such. In fact, I expressed my view earlier also that I have been keeping myself view away from all the PSU banking stocks. Maybe for the OMCs, except for 3 OMCs, I am keeping myself away from all the PSU stocks, whether you talk of NTPC, Coal India, or maybe the Engineers India kind of stocks. Yeah.
Okay, well, that's the EBITDA margin. Not bad either. 27.3% EBITDA margins is what the company has reported versus 26%, which was the expectation. So it's about an 11% top line growth that we're seeing. If you look at only the generation segment, then it's come in at 19,100 crores, the revenues that is, which is a growth of around 11.5% or so. That's the bar chart of what they've done in the previous quarters, but this time they've restated their numbers as well. EBITDA number looking better than what the poll threw up. Anisha is here with us to also give us some more numbers. We have the prima facie numbers, but how do you think the earnings look?
Well, the numbers look all right and healthy. The only thing that is a pain point for me is the fuel cost. So fuel cost as a percentage of sale has come in at 61% versus 67% last year. So in fact, that is a good thing. So a plus point there. If you look at the regulatory income, it's come down to 3 crores versus 20 crores that was expected. Tax expenses 706 crore this time versus 421 crore rebate that they had. So that is something that has in fact limited the bottom line. Otherwise, the results would have been better. A number of 2369 on the bottom line really looks good. We were looking for a generation growth of 10%, and that is what the company has delivered, it seems, because the number is very close to our poll. 1900 crores on the top line versus 1700 crores, a 2000 crore increase. This is better than what we were expecting. It seems that they have also improved the realizations a bit. That was one of the concerns with the street. As it is, the fuel cost has come down, and that was supposed to put top line under pressure because fuel is a pass-through for them. But it seems like the company has really performed well. We'll have to wait by and see for the PLF numbers of what they throw up. But overall, looks like a good set, Sonia.
Okay, good set of numbers coming in. Mayuresh, you want to come in on this? Because, the stock has also had a decent performance. If you look at the last 6 months performance of the stock, it's been on an uptrend from around 100 rupees, now at 160. Based on these numbers, would you put any incremental money into NTPC?
Again, as you rightly pointed out, Sonia, I think the stock has moved up in a substantial manner. So I think valuations are nowhere cheap compared to a couple of quarters back. But again, coming back to numbers, I think numbers are pretty reasonable and decent as I see it. And again, I think the regulated equity base is expected to grow at a very decent pace, at least over the next couple of years. What you're talking about in terms of the core coal PLFs to come through, I think it's around 81.3% in the quarter gone by. If they show an increasing trend, I think the core ROEs can very well get justified for NTPC. Can they show increase in the consolidated ROEs? I think the PLF-based incentives specifically for the generation sector are expected to come down. But largely, I think they'll get offsetted with greater generation capacities being added over the next couple of years. And again, I think if the management is confident of adding the capacity that they've envisaged, my own sense is that the core ROEs will also show significant amount of stability, and the consolidated ROEs will see some amount of traction. So again, investors holding on should clearly hold on to a stock like NTPC.
Okay, for now the stock has corrected a bit after today's numbers. That's the EBITDA number also looking quite okay actually. So it's a good number, but today of course the market is in a different mood. The market is in more of a profit-taking mood more than anything else. So that could explain why you're seeing this kind of decline in NTPC. Let's do one thing, we'll take a break on that note. Our closing bell money control question of the day is on stock of the day. Infosys has hit a 52-week low. Is it a good buy now? Log on to moneycontrol.com and post your responses, and we'll read some of the most interesting ones post 3:30.
Profit taking that you're seeing in NTPC post its numbers, but be sure these are a good set of numbers that the company has reported. An 11.5% top line growth. The margins are better than what they did last year, so it's an operational beat as well. But let's discuss some more stock ideas now. You have Sandeep Wagle who joins in. Sandeep, a bit of a profit taking mode in the market today. What's the sense on the Nifty and on individual stocks?
Afternoon, Sonia. I think the Nifty is a shade weak, but I don't see 8600 being broken. I mean, I would be worried if 8600 is broken down on a closing basis, then we may fall by another 100 points or so. As of now, I would be stock specific. A buy in a Castrol, stop loss 410, target 432. A buy in a KTK Bank, stop loss 153, target 169. And a sell in a Dabur, stop loss 301, target 283.
Okay, that's some buy calls and one sell call. Well, thanks Sandeep. The stock of the moment is Castrol, and that was of course also, now it's a consensus buy. Ashwini and Mitesh recommended it at the start, and now we have Sandeep also recommending it. Mr. Sen, what happened here? Castrol 4% higher. Is this the case of shorts getting trapped because of that expectation of block deal and the foreign promoters selling? Is that just that, or is there something more to this surge today?
Anuj, I think that is the most likely, that's the most logical interpretation, because in spite of the Q1 numbers, we have not seen the prices sustaining. But yes, the technical factors are really now playing, nowadays are playing very big role. The case in points are like Bharat Financial Inclusion, Biocon. So same thing is seen here also in case of Castrol. Maybe these prices or this rally may not be seen sustaining post the expiry, and maybe from Friday onwards we will again see the start. We will again start seeing the profit booking. Yeah.
Oh yes, it was a very good quarter for Castrol this time around. Profit growth of more than 12%, and the margins have done really well for Castrol this time. 32% margins is what the company posted, and now it's starting to react to that.
Yeah, so the point that I was making, Sonia, was that why the stock was not running up was because there's this expectation that the block deal would happen at around 380. That's the large chunk which is still remaining, right? And the expectation was that once that's out of the way, the stock will outperform, because clearly it had no business trading at 380, 390 on the earnings that it delivered. It had to move higher, but every day we keep hearing the block will happen today, the block will happen today. It's not happened, and now as the market has moved closer to expiry, shorts have completely got trapped, and that's why this leg of, in fact today if you see, it's shedding open interest. About 10% open interest is being cut. That's the classical case of short covering.
Oh yes, and the other stock that's reacting to its numbers is IGL. It's been the best volume growth for the company in at least 2 years. So double-digit volume growth over there. IGL is the one I'm talking about. A fresh 52-week high on that. Mayuresh, any thoughts on how a long-term investor should approach this at 700? Is it still worth a buy?
So again, I think if you stack up valuations, Sonia, again, it becomes a little bit of a difficult situation to comprehend how the valuations will re-rate themselves from the current level. But having said that, probably I think the volume growth has been exceptional for this quarter. How the business prospects probably look, I think the business prospects look pretty decent as well, at least over the next couple of years, to say the least. So again, I think it's a clear hold from my side for investors holding the stock from low levels.
Okay, Mr. Sen, your thoughts on IGL? It's been a rank outperformer, linear chart for last 3 or 6 months.
See, Anuj, what I've liked about the company after seeing the Q1 numbers, that they have in fact broken a trajectory. Till all along they have been, in that sub 30 rupees EPS kind of things. If you see for all the 4 quarters, the EPS has been, closer to about 7 to 8 rupees or 7 to 7.50. For the first time, they've broken this kind of barrier and, have seen the EPS getting posted of closer to about 11 rupees, 10 plus. And I think that same pace is likely to be maintained. I don't see much growth seen coming in the subsequent quarter, but even if you take a growth of about couple of percentage also, the EPS can be at about 45 or so, and traditionally this stock has been enjoying the higher P multiple. So maybe on the expected earning of about 45 rupees for FY17, if you take a share is ruling at a 15 to 16 P multiple, so you have the case for P expansion, and they have very well the confidence of extrapolating the Q1 numbers. There is no reason for taking a FY16 numbers. You just extrapolate the Q1 numbers what the company has posted, because once you see the vehicles having migrated on the LP, on the natural gas, then don't see them reversing back, and they have the share of Delhi and all sort of things where the situation is seen getting more enlarged on the gas going forward. So yes, I am keeping a positive view. Maybe a case of P expansion by a couple of percentage which can make the shares to move a level of about 760, 770. Yeah.
Okay, well, the other stock I wanted to discuss before we head into a break is Sun TV. It's now down almost about 5% but make no mistake, the last couple of months have been very good for Sun TV. It went from 350 all the way to almost 500, and now it's corrected post its numbers. So, Mr. Tulsian, a quick comment on Sun TV. This time ad revenues have fallen, margins have fallen, but this has been a big wealth creator in the past, or, at least for a brief period. Would you buy this stock at this price of 450?
See, Sonia, if you see the Q1 numbers, I don't think that there was any excitement, and honestly, if you ask me, I don't know the reason of its sudden spurt, why the stock has moved so much. And if you have not seen the growth coming in on a relative basis, if you compare it with the Z Entertainment, then you find the stock to be quite cheap. But we keep getting the news also that probably the promoters are looking to exit from the company. If that happens, then that could really be a big trigger, but I don't know what are the possibilities of that. But looking to pure Q1 numbers, I don't think that this stock deserves a buy call at 450. And what happens generally in case of Sun TV, that whenever you see a big upsurge coming in, the prices are not getting sustained at the upper level, and we see the profit booking coming in back. So maybe level of 400, 410 where it can correct to in the next a month or so. There, one can give a thought, otherwise not at the current level.
Okay, that's on Sun TV. Let's do one thing. Let's move on and address our Monday special Midcap Mania with Nigel D'Souza. And the stock on his radar is a logistics stock that could be potential beneficiary of the passage of the GST bill. Now, keep in mind, this is not a stock recommendation. This is just an analysis of one of the mid-cap stocks. Nigel?
That's right, Anuj. The stock that we're talking about is Chartered Logistics. Now, the stock in the last 10 months odd is up by close to around 70%. But just in the last couple of months, in fact, from the highs of December 2016, the stock is down by close to around 25%. So, interesting stock. Let's run you through the details then. As you said, the GST bill is supposed to benefit logistic companies. Mangalam has been telling us about that. Why will it benefit? Because it will remove inefficiencies, and also it will reduce the time that's taken at various, at various state borders, etc. Could reduce timing by around 5 to around 6 hours. So that's what will help efficiencies for some of these companies. I was looking at the quarterly numbers, and on the top line, we're not seeing any big growth. But Mangalam tells me that, in fact, for all the logistic companies, on the top line, we haven't seen a big growth. What looked good was the margins. The margin should come up for you on the screen. That's been gradually improving, and in fact now it's at around 14%. Just a few quarters ago it was in single digit margin, so that's a bit of a positive. And the profitability as well has jumped up because margins are improving and the interest costs have been coming in lower. Now on a quarterly basis, interest cost is only at around 1.5 crore from more than 2.2 crores in the past. The debt reduction is something that the company has been focusing on, and that's the reason why the finance cost has been falling. So let's pull up the debt numbers. It's down by close to around 47% just in the last couple of years, and debt has fallen from around 85 crores to around 45 crores. So that's a bit of a positive. The client base, I track a lot of the cement companies as well as metal companies, and in fact their big clients include something like a Hindalco. There's a BSE announcement as well, but they've got a fresh order coming from Hindalco as well as ITC. So a lot of top companies that use some of their services. So that as well should be taken into account. The promoter holding as well is at around 57%. Make note that institutions have no stake whatsoever in the company, and need to note that in fact Mr. Sharad Shah as well holds 1.3%. So retail investors we want. Interesting stock. Let's see where it goes from here.
Oh yes, very interesting stock. In fact, we had a show called Multi-Baggers for 2016 at the start of the year, and this was one of Ambrish Baliga's picks in that show. So, you know, the stock has had a very volatile run, of course, but thank you, Nigel, for educating us on the business behind the stock and what the numbers look like.
16 for 16 was the show
16
name.
for 16, yes, and that was one of his picks over there. But let's do one thing. Let's also take you through a couple of more stocks. So there's some news coming in on Motherson Sumi. It's set to pick ICICI, IDFC and IIFL for the share sale. Yes, there's so much talk about the share sale that it plans to do. The stock, as you can see, is now plummeting down almost about 2%
Is that the QIP, Sonia?
I'm not sure what they mean, but Motherson Sumi is looking at doing a couple of things.
It looks like a QIP because that could be by share sale. I'll assume that's a QIP. Mr. Sen, 3,000 crore for Motherson Sumi. The stock is reacting, of course, maybe because of dilution fears or the price. Your thoughts on this? I know your preferred pick is Bharat Forge, but on Motherson, how will you approach it?
See, Anuj, company has already announced this plan, you know, maybe about, I think, couple of weeks back. They have announced the plan of raising 3,500 crore, if I'm not mistaken, along with the Sumitomo, you know, where they have announced that those plans also. So this is in continuation, maybe to, you know, to comply with those things, the merchant bankers have got appointed. But I'm in fact keeping the positive view on Motherson Sumi as well, because if they have the plans of maybe $18 billion turnover by 2020 and the kind of inorganic growth plans also lined up by them, they do need that kind of money. And I think with the Sumitomo placement and with this 3,500 crore QIP, maybe the preferential allotment or QIP, the things are looking positive going ahead. Yeah.
Okay, we'll take a break on that note. When we come back, we still have half an hour to go before the market closes. We'll also get you a check on the mood across the dealing rooms today. Stay with us.
Welcome back. Well, the market, the recovery has also been sold into. That's interesting because the buy on dips played out, but that weak recovery, I mean, it was always weak. Just about 15-20 points intraday recovery is what you got. That's been sold into for the Nifty. Not quite at the low point of the day yet, but getting there. Ashwini and Mitesh are still with us. BTST time, but before that, Ashwini, you know, what have you made of this second round of selling, and how would you approach the index, and of course your BTST calls?
See, it's clear that the market is still range bound, and a contracting market generally tends to have these swings up and down. It's not very positive. It shows that, you know, there is no great institutional buying in one direction. So hence, you know, we are kind of tossing and turning. Hopefully 8500, 8550 will hold on the downside, and will still stay in that 8550, 8750 range, because broader market hasn't really been damaged. But overall, I think still range bound, and people who like to trade trends are still not a market for them.
Okay, and what about Mitesh? What are the stocks that we're looking at now?
See, I have a BTST on Allahabad Bank. It's a conditional buy. I need to see the stock get past 80, so it's just at about 79.5. Buy above 80 with a stop below 79, and I would look for targets of around stop below 78.5, and I would look for targets of around 82.5 for tomorrow. And BBCL is a buy with a stop at 596, targets around 612, 615 again for tomorrow.
Okay, Ashwini, did we discuss your stocks for BTST?
No, we didn't.
Okay, so
very interesting stock, you know, Heritage, again, broader market stock for years was hanging around 500. This is a buy with a stop of 690, look for targets of 740. HPCL is kind of making a lower top, so this is a sell with a stop of 1230. Target of 1185. And Tech Mahindra had a positive day on Friday after 5 down days, again making fresh lows. This is a sell with a stop of 472, target of 450.
okay, so more sales and buys from Ashwini. That's happening after a long time. But let's do one thing. Let's get an insight into dealing room chatter then. Mangalam Malu is here with Trader Talk. Mangalam?
Well, I was talking to a lot of dealers, and Anuj, they are saying that the markets are going to be range bound until expiry, and today is also one of the things where we are seeing the markets which are range bound on account of the expiry week. The volumes, they say, are on the muted end. and the activity itself from the institutions is slightly muted. Apart from a few individual pockets of underperformance, some profit taking seen on NBFCs, for instance, Bharat Financial was the case in point. We can expect a small buy number coming in from the FIs in today's trading session. That is also because there is a small long-only fund in the US which is facing some redemption pressure, because of which we are seeing some profit taking or some selling in pharmaceutical stocks. Apart from that, IT stocks continue to be the consensus sell, and we can expect further weakness there. And the expiry is seen within the range of 8600 to 8700. So by and large, consolidation kind of weak expected is what the dealers say.
Mangalam, thanks a lot for that. Well, the other stock that's surging now is Biocon. Let's pull out the intraday chart of Biocon. Mr. Wilson, phenomenal stock Biocon this year. It's double, I think, this year, or I mean, getting there. At 885, what's the call?
See, Anuj, a while back I've said that, maybe these are the expiry, this thing, and actually I'm not saying that the fundamentals are not in place, but I think it has ran much beyond the fundamental, and I won't be see these kind of moves, happening till expiry. Maybe in the next series, definitely we will see the profit booking, and even in the next 3 days, I won't be surprised to see the correction also, a fall of also 25-30 rupees, because a while back I've said that two stocks, Bharat Financial Inclusion and Biocon, both are going to show extreme volatility in next 3 days, because purely on the technical factors, showing huge upsurge, and then maybe correcting in the couple of hours also, which will be difficult to predict by about 25-30 rupees. So keep a watch for these may be both the stocks, maybe as stocks for the high risk, high return kind of traders till expiry.
Okay, so high risk, high return at this point. Ashok Leyland has also started to pick up just in the last 5-10 minutes. So Ashok Leyland has had a fairly subdued performance for, over the last few months, but just in the last 10-15 minutes, there's a sudden spike up that you've seen there. And a couple of more stocks like NoSil are really spiking up now. So 11-12% higher on NoSil. But the stock on the downside is Grasim. So once again, it's one of the big losers. Grasim now is down about 2.5% in trade today, and in this month alone Grasim has lost about 8% or so. But talking about some of the big gainers, Escorts is one stock on our radar now. As we've been telling you, that stock has gained 85% in this year and has doubled over the last 6 months after selling its loss-making auto business. Nikhil Nanda of Escorts joins us now from the sidelines of the IACC conference. Nikhil, hi, good afternoon, and thanks for joining us. The biggest positive, is the divesting of the auto business. Can you share some numbers with us? How much did you do it for, and how will it aid your profitability?
Platform called Escorts.
Okay, Nikhil, thanks a lot. Your shareholders are also having fun and have made a lot of money this year. I can tell you that from 130 to 316, it's been a remarkable run. Mr. Wilson, this is coming out after years of underperformance. Do you see more gains for Escorts?
See, Anuj, I have been maintaining my view that I think the stock looks fully priced. I've heard Nikhil giving the plans, but those plans are all lined up for next 3 and 4 years. And he has rightly said that they have regained the third position, but that should be sustained and maintained. And if you really see the tractor sales for next couple of months is going to be quite dull. We'll get to know the sales figure for the month of August, which will not be too happy. Market will not receive it well. But again, come October, November, because you can say that tractor sales are all seasonal. In May, June, July, you get the best sales number, and again in October, November, December, ahead of the Rabi crop, you get the best sales number. So maybe the valuation tag has to be given to all the stocks considering all the prospects. So considering the present price at which it has been ruling, I think that if you really ask me, I may find it a bit overvalued, and I won't call it as reasonably priced. I may find it a little bit overvalued at the current level.
Okay, so overvalued at current levels, that's the word coming in on Escorts, but the management is very confident that apart from its core tractor business, even the railway business is picking up. That's where the next growth trigger will come in from. But our closing bell money control question of the day is on Infosys. That stock has hit a 52-week low today. Is it a good time to buy now? Log on to moneycontrol.com, post your responses there, and we will read out some of the most interesting responses post 3:30 p.m. still status quo for the market, and we have about 8.5 minutes to go before the day comes to an end. So let's find out all that's buzzing beneath the surface. Varinder Bansal joins us now with some buzzing stocks. Varinder.
Some of the smallest cement companies are surging in the last 10 or 15 minutes of trade. Look at Barrack Valley Cement, Deccan Cement, some other stocks like Orient Paper, huge volume in that stock, Vanberry, a few companies gaining in the last 10 minutes of trade. Otherwise, caustic soda companies or chemical companies are just surging today. Nosal you mentioned about. Otherwise, Chemfab Alkalis up 20%, DCW up 6%, Gujarat Alkalis, Punjab Alkalis, all of them gaining today. Some of the new names which I'm picking up today, look at Tiger Logistics, that stock is up 20%, Anama Petrochem, Wama Industries, Quantum Papers, WS Industries, Cybertech. This stock has been seeing accumulation since last many days. Competent Automobile Company, another new name. Some other small cap gainers, look at Butterfly Gandhimati, that is up 20%, SL Frontline, Fortis Muller, Unity Infra, Sarda Plywood, Uniply Industries, so smaller plywood companies also active. Tara Jewels, Sharda Motors. Sharda Motors has been gaining. This stock has gained nearly 30% in the last 5 or 6 days. Star Paper, all these education stocks like Aptech, NIT Limited or Jet King are moving up today. In the mid-cap gainers, look at Deepak Fertilizers. That stock is surging today. Lloyd Electric, Sharia Shipping, J Kumar Infra, Ukal Fuels, HUEC. Gutrick has gained after a long time. Ashapura Intimates Fashion, Infinite Computer Solution, Texrail, Bengal and Assam has been surging since last few days, and Jain Irrigation and Jain Irrigation DBR as well.
Okay, Varinder, thanks a lot for that. It's the mid-cap index which is actually now at low point of the day, and if you look at the advanced decline ratio as well, that's also been on the declining side for better part of the day. Bharat Financial Inclusion is now down 5%. Apollo Tyres is down 4%. Ashwin, your thought on both these names, Bharat Finance and Apollo Tyres?
I would say Bharat Financial is still going through a correction, a deep correction, 50-day moving average touched. So maybe at some point it is a buy. But Apollo Tyres is kind of range bound, and all tire stocks had a brief pullback rally. I think Apollo Tyres only above 200 really becomes positive. That's more of sideways. I would look at entering Bharat Financial again whenever it turns.
Okay, Mr. Tulsian, seems like that overhang on Grasim is not out of the way yet. I mean, the stock is down another 3%, and now it's fallen from 5,300 all the way, back to about 4,500 or so. Do you expect some more pressure on this name, and at any point will it become a buy?
Sonia, if you really, because the same view I will maintain, the kind of destruction which we can see, being made by the promoter, the classic case is Grasim, because let me again quickly repeat that 1.75 shares are the entitlement of one share, of Grasim. That gives you a value of about maybe 7,000 crore. If you add the 1,500 crore of its standalone business, Varinder has just now mentioned about the chlor-alkali company, that is Grasim standalone is the largest producer of caustic soda. They have 8.5 lakh ton per annum capacity, but see, on one hand Chemfab Alkali is hitting 20% upper circuit, Grasim being the largest caustic soda maker or chlor-alkali company in India is seeing the share correcting. So add 8, maybe say 7,500 and 1,500 for the standalone, 8,500 rupees, that's the sum of part valuation comes for Grasim share, but at what it is ruling, 4,500 rupees. So I won't say that the further correction is likely. Maybe the sentiment effect is being seen now, either to put a pressure on the management to force them to give a rethought on the merger ratio. But yes, this negative bias is definitely a heartburn for many of the shareholders, because as I said, Grasim existing shareholder of 1.75 entitlement of Grasim share will get reduced to 1.25 shares after merger of Aditya Birla Nuvo. So what I've stated at that point of time, that the valuation has not considered the valuation parameter of Grasim and Aditya Birla Nuvo. In fact, it's a very loose case of valuing the company both at the time of merger and giving a swap ratio of 3:10, which is directly benefiting the management to increase their stake in the company from 31 to 40%. But again, let's not go into the old story again and again. My point is that I don't think further weakness coming in Grasim. All the negatives, whatever has to happen, has happened. But because of the bad move having initiated by the management or the promoters for their selfish interest, without caring for the minority shareholders, we are seeing the Grasim is seen as a victim of this correction.
Okay, Grasim down about 3% in today's trade, and of course the stock still under this overhang of this deal. But before we wrap up, Mr. Tulsian, just also a quick thought on HPCL ahead of numbers. That stock is at low point.
See, Anuj, I don't honestly feel that the kind of run-up, which you can see ahead of the numbers is likely to sustain, because those who have got a very good profits, maybe they will they definitely go for profit booking. Maybe in the near term, the profit, this share has seen having run to its fully price. Maybe once the results are out, and then, when you will be seeing the share going for ex-bonus after about 30 days or so, or maybe about 23 weeks or so, at that time again we will see the rallying coming in, because at that point of time many people go for the tax planning also, buying come bonus and then selling ex bonus. So maybe in the near term, I honestly I don't find any reason for the results to be bad, but I don't find any upside also. Maybe post numbers you will see some kind of profit booking coming in, the way we have discussed for NTPC. As I said, NTPC numbers were definitely not good, and that is why we have been seeing the profit booking coming in. Because if you take a QOQ call, because what is happening now, companies are not presenting the QOQ numbers, and it is analysts quickly, hurriedly, they take a view on the YOY numbers. Case in point is NTPC. We forgot to in fact discuss it in detail. If you see on a sequential basis, NTPC EPS fell from 320 to 290. You can't call it as a good number. So similarly may be the case with HPCL also. If you compare it on a Q and Q basis, and why you should not compare it on a QOQ basis, you may have some kind of disappointment, because we just quickly go through the analysis of the results on a YOY basis, which is in fact incorrect way of interpreting any results. So yes, maybe profit booking ahead of the results, which is in fact happening in a right spirit. Yeah.
Okay, let's just count down to the end of trade, because we have about 1 more minute to go, 1.5 minutes. Today was not a great day. I mean, it was down about 0.5% for the Sensex Nifty. The mid caps fell about 0.7%, and the market breadth was weak. So clearly, it was a day of profit taking. Anuj.
Oh, yes, it was profit taking. No more, no less. And of course, keep in mind that one leg is not doing well, which is IT. Yeah. So if banks have a rough day or off day, the market will find it tough to go up, but the market is not obliged to give you daily returns, Sonia. Yeah. And this is expiry week, so let's see how things pan out. The big test of the market would be if it makes a move sub 8600, and whether that dip gets bought or not. But for whatever it's worth, let's just do a recap of the market today. It was a weak day, as Sonia pointed out. Let's start by talking about the stocks that led the market lower today. I think the biggest contribution would have come from TCS. That was down about 2% in trade today. Infosys, of course, made a new 52-week low in trade, so that was also down. And then, of course, you had big losers like Grasim, Ambuja Cement, Lupin, Aurobindo Pharma. Lupin and Aurobindo both were down 2%. Sun Pharma as well down 2%. Cement corrected quite a bit. Apart from Grasim and Ambuja, you also had ACC and Ultratech that were also lower. Tech Mahindra was down 2%. Tata Motors DVR was lower today. State Bank saw some profit taking after a relentless run. Maruti as well has corrected now about 4% from the recent highs of 5,000 plus, back down to 4,800 on Maruti. Mahindra and Mahindra was also lower, as was Bosch, Tata Power, ONGC, a lot of 1%ers in today's trade. On the gaining side, HUL was your top gainer. Pointed out the stock in the morning as well. That's the defensive play, but 2% higher on lever. Z Entertainment was up about 1%, and ITC was up about 1%. And rough day for mid caps as well, Sonia, though not reflected in the advance decline ratio.
It was a rough day, but there were some stocks that bucked the trend. So let me tell you about them. Oberoi Realty was up 7% on the back of a good set of numbers. So that stock had it good. In fact, it hit a 52-week high. IGL has reported a volume growth of 10% after very long. So that stock actually moved up, and in late trade it surged to almost a 5% gain. Escorts was up almost about 3.5%. Bullish comments coming in from the management on not just the tractor business, but on the railway business as well, which is expected to do quite well. NTPC, well, the stock sulked, but the PLFs, the plant load factors, were very strong for NTPC. So it did manage to recover a bit from the lows of trade. Aptech was up almost about 12%, so that was a big buzzer as well. And HOEC is another big mover. Lately it's moved up 8% today and up 40% just in this year. On the downside though, you had Sun TV that was under pressure. Sun TV was down almost about 5% on the back of weak earnings. The ad revenue growth has fallen, the margins have fallen, so Sun TV was under pressure. And Welspun India, that was clearly the stock of the day on the downside, down about 20% after Target decided to end its ties with Welspun India. So that's the synopsis of the markets. Let's get some final comments in then before we wrap up the day. Ashwini, what is the way to trade tomorrow, considering that we've seen some profit taking today? Okay, we'll get back to Ashwini in a bit, but Mitesh, same question to you. How do you trade tomorrow?
I think, Sonia, the idea of trading, with stock-specific bias remains. I think the range is still contracting, and my sense is that I think, only with the expiry, we might get a breakout on the indices. So I think for the time being, what we've seen is some kind of outperformance from the banking lot and underperformance from the IT lot. I think that call still remains that you can, still explore opportunities on a pullback to go long banks and short IT. But otherwise, it's a very, very stock-specific basis for most of the rest of the pack, and I think that's the way we are approaching it.
Okay, that's the way you're approaching the market. Mitesh, also, what about some of these large cap pharma names? Lupin, Aurobindo Pharma, Sun Pharma, all of them were lower today.
Yeah, I think Lupin, after the numbers has clearly gone into some kind of a downtrend. We have talked about fresh lows being made over here. I think the stock is already on its way. Sun Pharma to me appears to be a stock which has gone corrective recently, and I think it's heading towards the lower end of the bigger range, which is close to about levels of 720, 725.
Okay, Ashwini Gujral is back with us. Ashwini, I was asking you about the trade for tomorrow, considering that we've seen some profit taking today.
The trade will be on both sides. Like you've seen, Bank Nifty, it's going up and down. The initial trade, given that we've had a decent down day, probably if we get closer to today's lows, I think a buy trade would be useful, because you will get a fairly strong intraday move from those levels. But overall, it's sideways, and certain stocks will move up, but the bias is a little weak. If you have to buy for a positional basis, maybe buying around 8500, 8550 may be a good idea. Till then, I think we will not come down or go up in a great hurry, and just kind of consolidate, have one down day, one up day. That is the way we should trade.
Okay, gentlemen, thanks a lot for taking us through the last hour of markets today. So rough start to expiry week in the context of the global markets. We'll have to say that it was an off day and just a profit booking day. But closing bell money control question of the day is on Infosys. That's